Hey everybody, Dave here, Hidden Freedom, and welcome back to another video. In this video, I want to talk about the reasons why I kick dividend investing to the curb for now. So let's not waste any time and let's go ahead and get started. Alright, yes, you heard me correct. I did kick, mostly dividend investing to the curb for now. And I'm going to talk about the reasons why I did. So a little bit of a backstory here. I've been chasing fire for roughly about 8 years. Started roughly in about 2015. And then last year, 2022, I met my goal pretty much and then decided to retire, go hike the Appalachian Trail. Got done with the Appalachian Trail after 6 months and then got bored and went back to work roughly after about 10 months of being retired. So here I am working again, got new goals, and the dividend portfolio is not really going to work for me right now. You know, am I completely done with dividends? No. Are they going to be a bigger part of my portfolio down the road? Quite possibly. But there's a reason why I dumped dividend investing for now. So let's go ahead and talk about that. So the first thing we're going to do here is we're going to look at the dividend charts here. And so I kind of started a dividend portfolio here in 2019. So now I had done dividends, I don't know, 20 years ago. I've been investing since about 2001, and a lot of stocks I was invested in over those years, they paid dividends here and there, but I was never really focused on dividends. So I didn't really start tracking dividends until 2019, and when I just started a small portfolio there and received $876 for the year 2019. And then 2020 I continued to build the portfolio out. Got over $7,200 of income for 2020. 2021 started to ramp up even more here and built it out even more and received income of over $25,000 for 2021. Fast forward to 2022, the year that I retired in April, and I was focused more on dividends because I needed to provide some income for my basic living expenses. And that's the reason I shifted some stuff to Devo and shifted some stuff to JEPI and amongst some, individual stocks as well, dividend payers. So yeah, all of 2022, I received over $62,000 in dividends. And then fast forward to 2023 because all of my dividends are in for this year, and I received over $43,000 in dividends for 2023. So that is a little bit of a cut from 2022, but I did make a lot of changes in 2023 as well. And that's what we're going to kind of talk about in this video, in addition to, what I'm going to be doing going forward. So let's just take a look here at those. Let's see here. So here's 2019 right here. So those are the stocks I was invested in 2019 there. And then you go to 2020, and there's the stocks that I was invested in 2020. You can just pause the video if you want. So a lot of stocks in 2020. And then you scroll down, and we have 2021 there. Get a little more focus there. Cut some stocks out of the portfolio. All these red ones got cut out of the portfolio. And then started going a little bit more of income producing ETFs like Devo, NUSI, JEPI, XYLD, XQYLD, QQQ, SPY, SCHD. And then 2022, last year, kept some individual stocks in there. All the pretty much ones from the previous years. Cut out MO, of course, because I wasn't a big fan of the cancer stick company. But, everybody likes that company because they have a high yield. So all those dividend yield chasers tend to like those types of stocks. And then 2022 here, continued to build out QQQ. Had planned to do an IWM, I did not. SCHD, I planned on building out larger, and I did. Start adding more to that. Ended up cutting NUSI out of the portfolio last year, right at the August time frame or so. Cut out QYLD and XYLD, and I'm really glad I cut those out of the portfolio. Started building out more JEPI as well. I was pretty happy with it, making roughly about $4,000 a month. of income just because I didn't know how I was going to live. Just needed my basic income needs met. That's normal stuff that you need to pay for, right? Like a place to live and food and all that stuff. So, and scroll over to right here, just more individual stocks there. And then fast forward to 2023 here, and this is the year that I decided to go back to work in February and made some pretty significant changes here. Obviously, I cut Devo out of the portfolio roughly around June timeframe of this year, and significantly reduced my JEPI income from $3,000 to $4,000 down to about $700 a month. There was I don't know, $400,000 I think invested into JEPI at one point. Maybe a little bit more. I can't remember. Now there's only $100,000 in there. So, and there's a reason why. And it's producing about $700 a month, and that mostly just goes towards my HSA, funding the HSA. And I cut out all the other individual stocks here. So all these red numbers here are the last dividends I received from all those individual stocks. And also sold out of SCHD there as I had just built that out. And then sold out of QQQ, final remaining QQQ earlier this year as well. So that's pretty much the status for all the previous years that I had been tracking it anyway, all the way back to 2019. So went full circle pretty much there. Built the portfolio up to get dividends and then kind of started reducing the dividends. And just to let you know, because it's Christmas time, there is a special on these Google spreadsheets. The code will be HF Xmas 2023, and you can see the link down in the description and or the first pinned comment if you're interested in getting these spreadsheets. What is the portfolio going to generate as things sit right now? So just looking at the portfolio here, if we scroll down, this is where the portfolio sits today. Okay, so we got VU, that's just the HSA there. And JEPI, like I said, there's roughly about $100,000 into JEPI right now, so 1,794 shares in there. Generates roughly about $600 to $700 a month. And the only reason that's really in there right now at this point is just to generate that income from my HSA. Now, I could just take money out of my paycheck to do that, but I don't. It doesn't come out of my check. I'm actually contributing to that on my own, and then at the end of the year, I just get reimbursed for that capital that I deposit in there. The reason I do that is just because I hate having to roll stuff over. I already have an HSA through Fidelity, and through my work I would get another one, and why deal with that? And they don't contribute anything to it. So at the end of the year, I will just get that money back. It's not going to be that much, but $36.50 or $38.50 or whatever it is going to be next year. Which will be tax preferable. So JEPI there, I reduced that down to $600-700, and I significantly reduced that position from several $100,000 down to $100,000. I know you're probably thinking, Dave, do you not like JEPI anymore? No, that is not it at all. JEPI is still probably one of my number one ETFs if I was gonna need income to live off of. And I had a little bit smaller portfolio, I'd say. I'm not quite comfortable with going into just straight dividend stocks or something like that. Then maybe JEPI is a better option for me. I still wouldn't probably put my entire portfolio in there, of course, because I'm limiting to my upside of my portfolio, right? That said, I made plenty of videos on JEPI talking about the reasons why I love JEPI. You can look at that video up here in the top right hand corner. And just to give you a little bit of a snapshot of why I like it, because I feel like it's the best of three worlds, right? You get a little upside, you get some lower beta or a little more defensive out of it. It has some pretty good dividend income as well. And I feel like it's pretty safe. It's a pretty safe ETF. The expenses are relatively low on it, and it pays monthly. And I talked about last week's video the reasons why I like monthly income coming in as well. When I was retired for 10 months, taking my little mini siesta, fire, or whatever you want to call it, last year. Okay, so that moves us on to SPY here. So over 3,040 shares in SPY right now. So there's roughly about $1.426 million in SPY. And obviously SPY does pay a dividend, but it's very low, right? It's 1.5% right now. So I'm only going to be generating roughly about $19,000. I think that's showing right there. And my eyesight is starting to go pretty big. So $19,000 of income. Yeah, that's not chump change. That's pretty good, but that's not that's a far cry from last year's or this year's 43,000 and last year's 62,000. So you're thinking, okay, Dave, why are you doing that, right? So let me go back here to the income. So $19,000. That's a pretty significant decline from this year and last year. But you also have to remember, I went back to work, and going back to work means that the dividends, while they're preferable coming in at 15%, right? Unless you have a super high income, you're being taxed at 15%. Otherwise, I think it's 20% if you have a really high income. Yeah, 15% is nice, but if I can reduce my tax burden even more by going into SPY, reducing that income down, it's still going to be tax preferable at 1.5% still. All the 1.5% coming in from SPY should still be 15%. It'll be a long-term hold. I think it's all qualified dividends, if I'm not mistaken. So JEPI obviously is going to be a mix of everything. I did a tax video on JEPI, so you can take a look at that video on the top right over here. For 2023, when Schwab finally releases the paperwork for JEPI, I will go ahead and make an updated video for the taxes on JEPI, and I might even make one on SPY as well. So yes, the income coming in from JEPI this year will be a mix of, I believe, return of capital and qualified dividends, and then just kind of a capital gain as well. So it'll be a mix of all three, I believe. Just kind of like it was in 2022. So yeah, you're thinking, why are you doing this? Well, I'm just trying to reduce the income a little bit. We get it taxed on it, going to get hurt on it. I have a relatively, I wouldn't call it like a super high paying job, but it's, higher than I want to be, I guess, when it comes to paying more in taxes, right? Once you get over that $200,000 mark, you're going to be paying a lot more money to the government. Okay, so I try to reduce that as much as I can. I mean, I got other income coming in as well. I got note income and interest income. So I got other income coming in that I have to worry about as well, right? So I need to reduce this if I can. The more money you make, the more money they take. All right, so I'm just trying to reduce that, and that's one way of doing it, is just reducing the dividend income. And I don't need the dividend income right now. Okay, so if you look back here, every single one of these years right here, including the year that I retired, all right, so 2022 I was retired for most of that year, and then 2023, just for a couple of months I was retired in 2023. Every single one of these years here, all of these dividends were reinvested back into the portfolio. Did not spend a dime of that money. You're thinking, okay, well, you were retired for 10 months. What did you live on? I lived straight off of my high yield savings account. Okay, that's what I lived off of. I had like $25,000 in there, and I pretty much hiked the trail. It only cost me about $12,000 to $15,000 to hike the trail for 6 months, and then the rest of the time, I just finished, draining that account, and then I started going right back to work. So maybe there was a month or two there where I actually lived off the JEPI, but it was very short time period there if I was living off the dividends at all. So all this money got reinvested back into the portfolio. However, had I just been in SPY all along, or VU, or VTI, for example, I would have obviously had a lot larger portfolio, or as I like to say it, a U-Haul following my hearse. If you're enjoying this type of content, please go ahead and like and subscribe and set that bell notification so you do not miss future videos. So SPY, if we look at SPY right here, and I don't even want to look at last year because I don't have the numbers anyway, but if we're looking at SPY right here, SPY is up year to date 22.7% right now. Okay. Now if we go look at, say, JEPI, for example, and JEPI is up 1% this year. All right, let's look at just Devo. Now I like Devo too. I've made quite a few videos on Devo. Big fan of Devo. But Devo is up 0.67% this year. Now, granted, it does pay a little bit higher dividend than SPY, right? But it's still a far cry from what type of return you would get out of SPY. Now, if we're looking back at JEPI here, JEPI is at 8.6%. I actually think it's a lot lower than that. It's roughly about 7%, I think. So yeah, it's still a far cry from where SPY was on return this year. So that is the reason why I'm in SPY right now. I just don't need the income coming in, and I'd rather, let this portfolio ride, so to speak, and, obviously increase my net worth significantly higher to get closer to my $5 million goal. This portfolio, that's one way to do it. SPY being up 23% this year, and NASDAQ being up over 42% this year. And you just saw the JEPI numbers. You just saw the Devo numbers. Let's just take a look at SCHD. What is SCHD doing this year? Now it looks like SCHD, as much as it looks like it's doing okay, it's actually just flat on the year. Flat on the year. Yeah, it pays 3.2% dividend, but geez. This is the reason why I decided to get rid of the dividend portfolio for now. Pretty much go almost 100% SPY right now and reduce my dividend income where I don't have to pay taxes on it. Now, obviously, I'm going to have to pay tax on this gain here at some point if I make a decision on what I want to do. But I also talked about in a previous video the reason why I'm probably going to end up just sticking with SPY and end up just going that route of the 3.5% withdrawal rate, maybe even to 4%. I don't know. We'll see. And just selling off shares of SPY, living off of some of these dividends here, especially if I can grow this portfolio significantly more over the next 3 to 4 years. So that takes us here to my Schwab account. So this is pretty much matches what I have in my portfolio or my Google Sheets, so to speak. So I think it was only off by just a few cents right there because I think Google Sheets is rounding up for me or rounding down. So that's what, this is just the monthly breakout here. I've been reducing the dividend income slowly, and that was the big SPY payout, and then I'll get another one in here in January. But let's just take a look at the next 12 months here. So this is what we look at for the next 12 months. Obviously, this could change here if I decide to get rid of some SPY, as I'm a little of a market timer. I try not to be, but sometimes I am a little bit. Granted, it would probably only be mostly in my tax-deferred accounts, so I don't have to deal with capital gains in those accounts. So we get a decent payout here in January, and then we got some of these smaller months here. These smaller months are mostly just the JEPI income. So they're projecting my income to be about $24,000 next year, which is about right. Because there's about 5,000 or 6,000 coming in from JEPI. You had the SPY at about 19,000. That's roughly about correct there. And some of that will be, quite a bit of it will be on the tax deferred side, because there's multiple accounts. Obviously, if we just go back here, this is the brokerage account, so I will be taxed on, roughly about $16,000 next year of dividend income, and then, the rest of the income is all on the tax deferred side, so I don't really care. So those are the reasons why I've pretty much got rid of the dividend portfolio for now, not focusing on it. I know that it's not everybody's cup of tea, but in the long run, I should be doing a lot better off than the dividend portfolio. And I'm not completely against dividend portfolios at all. Look, I've made a lot of money on dividends so far. I'm happy that I had those dividend stocks because there's a lot of capital appreciation in those stocks as well. But I'm just trying to reduce the income for now. But in the end, I should actually have a much larger U-Haul fall in my hearse than had I just stayed with dividends over the long haul. So that's the conclusion of this video. If you have any comments, questions, or concerns, leave a comment down below. Would love to hear your comments, and we'll see you in the next one. Thanks for watching.